Imagine the situation where you'd have to pay 250 rupees for a liter of petrol. That is what Sri Lankans are facing right now. They are in the middle of a deep economic crisis with fuel prices skyrocketing, even two national newspapers discontinuing their daily service because of paper and ink shortage. We have seen schools cancel exams. We have seen power cuts of more than 10 hours in the country per day, and the situation is just getting worse. So in this video, let's see why this is happening in Sri Lanka right now, and we need to analyze if a similar situation would happen in India as well. So this is Market Feed. Let's get started. The current situation in Sri Lanka is very sad. Like I said, the price of petrol is at 250 rupees. If you have to pay for 1 kilogram of chicken, it's going to cost you about rupees 1000. Just imagine that. And absolutely, this is causing a lot of hardship to the common people. So the events that took Sri Lanka to this current situation have been the effect of many decisions for the past 20 to 50 years. So let's look at all of them. Sri Lanka as a country is currently facing issues to pay back their loans. Imagine, this is not a normal average user who's currently facing difficulties with the bank. This is a whole country, a whole nation which is struggling to pay back interest on its loan obligation. And just this year alone, in 2022, Sri Lanka has to pay China $5.5 billion in loan repayments and interest. The Rajpakshe family have had a tight grip of the country's political situation, and they have been ruling Sri Lanka for the past 20 years and causing so many difficulties. So this dynastical ruling along with high corruption have caused many issues for the country that they are suffering from now. The issues for Sri Lanka started in 1997 when they were changed to a middle income country from a low income country, and thus they started getting loans at a higher interest rate. And being an island nation, they are highly dependent on imports, and currently they have a very low forex reserve. That means they have very few dollars to spend on importing all these goods from other countries. So all this has been brewing in the background for many years. But how did they get to the situation they are in currently? So Sri Lanka have been borrowing massively for the past many years, and their current debt to GDP ratio, that means the amount of debt that they have compared to their gross domestic product, is more than 100%. That means their total debt is more than their total country's domestic production, and this is obviously a big issue, and the last 4 years have not been favorable for the country. So in 2019 there was a bombing in a church in Sri Lanka, and this caused a massive dip in tourism. We know that 2020 was a year which ruined tourism around the world. COVID hit and even Sri Lanka was badly affected. The loans that they were taking, the debt that they were taking on, it was not used for any high yielding projects. There was no yield from the investments that they had been making, and this was an issue as well. Sri Lanka did not have any money coming in from their previous investments. The government passed an act or a law overnight to ban all fertilizer imports, and this created a huge drop in their agricultural production. Rice production for the year went down by around 20%. So till then, Sri Lanka as a country was self-sufficient for their rice, and when the production fell by 20%, they had to import rice to the country. So the country had to spend more dollars to get more rice. Sri Lanka being the second largest exporter of tea in the world, this caused an issue for the tea export industry as well, because they started getting less revenue because of the tea shortage. And even though this law was quickly reversed, the effects did not quickly go away. And we know that in 2022, when the Russia-Ukraine war hit, the oil prices or the energy prices around the world exploded, and Sri Lanka, again being an island country, being a net importer, they had to spend a lot of dollars in trying to acquire crude oil, coal and other energy products. And as we talked in the last video, there is a cascading effect behind each and every decision that you and I or even Sri Lanka took. So when all this economic crisis started, they made the same bad decisions that many countries have made over the past and started printing more and more money, and this caused inflation to skyrocket and the economy to collapse. Now let's compare the situation between Sri Lanka and India. India is in a similar situation. They are a net importer of energy, as we discussed in the last video. But India currently, they have a foreign reserve of more than $620 billion, while Sri Lanka has a reserve of near only $2 billion. So in that front, we are okay currently. And inflation around the world is really high right now. Even in India, it's really high right now. And the Reserve Bank of India has said that the current inflation is transitory and it will all be okay soon in the coming years. And around the world, whenever there is an economic crisis, there is mostly a bad government behind the scene. So India right now has a bright opportunity to make sure that we learn from these mistakes and that we hold governments and bureaucrats accountable for all their actions and make sure that such a situation does not happen in our country ever. India right now is trying to improve its relations with Sri Lanka. Sri Lanka, as we know, have been slightly aligned with China for the past many years, and this has been largely due to the borrowings or the loans that the country has been giving to Sri Lanka. And our country is currently giving $1 billion of line of credit to Sri Lanka so that they can meet their immediate financial needs. So what we are saying is that India is currently at a much better situation than Sri Lanka, thankfully. India can cheaply borrow loans from international banks because our credit rating currently is really high and we have not faced any issues with meeting our debt obligations. This is not the case with Sri Lanka. So one thing we can all do right now is invest in India. As many international banks including Goldman Sachs, Morgan Stanley, Standard & Poor's, they've all said that India is a bright opportunity for the world markets in the coming 20 to 25 years. So why not invest in our capital markets? And no, it is not enough to store your money in a savings account or even in a fixed deposit for that matter. In India, if we have to make the most of this situation, we have to look at investment products like the stock market, mutual funds and whatnot. We'll talk about the best mutual funds that you can invest in the current market scenario, but that's a video for another day. So this is Ajay signing off. See you all. Bye bye.